Hi there, welcome to Prime Time. I'm Paul Orford. I'm here with Constantinos from Tiqbee, and I was really intrigued to get you on, Constantinos, because I get a lot of people with signals contact me, and 90% are rubbish, or they work against the client's interest, shall we say. So I was really intrigued to know about yours, what separates you from everybody else, essentially. So do you want to give me your background first of all?
Hi Paul, thank you for having me. Well, actually we started off as a really long time ago as a client of the investment firms. We were portfolio managers. We were actively trading. After we studied and obtained our certified financial technician diploma, we went a step further. We really went in depth into technical analysis. We emphasized in technical analysis. And that's when we started approaching the investment firms. Our first, basically we started hitting doors with our track record, with our performance. Once we managed to obtain a nice audited performance. And the first investment firm that let us in was Atlantic Securities. It's one of the first and most traditional investment firms in Cyprus. And we actively managed their portfolio management clients. So that's how we started, and we were leading the portfolio management of Atlantic for approximately 2.5 to 3 years.
So if I'm Joe Public, what should I look for when I'm looking for signals? You said audited there, so yeah, okay. How does that work?
At some point when we left Atlantic Securities, mainly because of the Greek crisis, our clients were Greeks, and once the problems arise with Greece and the capital controls, and unfortunately it was stopped, we saw that the industry was flooded with signals and signal providers in general. At the point we thought, it's a nice opportunity. We had our performance. When we're referring to audited performance, is we pick one of the big four auditors, KPMG, PwC, and we provide the execution of the trades. They audit, they see that the transactions have indeed been executed on live accounts, and then they approve and they sign. That's a sign-off, that's audited, because we do get a lot of signal providers or traders in general providing track history or track record, and unfortunately it's done on demo accounts. They choose the dates to trade, they back test on specific dates, and when they have drawdowns, they extract it from their performance. So there is a lot of fishing going around, and we founded Tiqbee. We're a group of technical analysts. We're all certified. We have undertaken roles as portfolio managers in major regulated investment firms. We founded Tiqbee, and we started providing our signals based on our strategies to retail clients.
All right, so I'll be honest with you, I've worked like in retention departments at some organisations, where, hand on heart, it's Forex, all right? So do you kind of audit who you're going to work for, like who you're going to work in partnership with? Because when you're working in a retention department, nothing is better than if you have got signals that work. However, if you've got a management team, may not want them signals to work, should we say, when you're giving them out. There's kind of that conflict of interest. How do you not want to tarnish your brand?
Okay, if you notice on our website as well, we do not refer any broker. We're totally independent, and any white label solutions we offer, they are mainly to STP brokers. STP means that they don't have a market-making license, and they do not have a direct conflict with the client's funds balance. So they're fully aligned with our vision. So we want the trader to win, therefore the broker wants the trader to win. We do have our signals, we do have our statistics. Someone can log in and verify it. We have our own Telegram group. We have our dashboard. They can just log in, they can see and verify by themselves that the statistics we offer, our winning ratios, are indeed true, and they can see it from the published date and can monitor the trade as it goes, and they can see the overall action of the overall result of how the trade behaved. That's very important. That's something that's missing from the industry, because we don't only provide, for example, buy euro dollar, stop loss, take profit. We provide the screenshot. We technically support the trade. That's why we're going in. That's how take profit, and then we provide the screenshot with the result of the trade. And we have managed to provide some very solid returns. And for example, we had months with 87, 88% winning ratios, and these trades can be monitored in our groups, in our dashboard, and can be verified by the traders themselves.
All right, so is there a specific trader, we'll call them, who should or shouldn't do it? Because there's some, let's face it, quite a loose relationship with reality, who want to turn that $100 into 10,000. I mean, clearly this is not for them. Who is it for?
That's a mission impossible. I mean, you can do it in a month and then lose everything in the second month. We, as technical analysts, we use specific stop losses and take profits. We always state a stop loss and a take profit, and that does not change. We do provide between, for example, if the trade goes into our direction, we do provide in some instances the ability to the trader to lock some profits and move his stop loss to break even. So we do provide guidance. We always suggest to the client maximum to apply a 1% risk to each trade. For example, in our Telegram group, we offer mainly 4 to 5, maybe 3 trades a day. That's enough. We do, for example, if we take the last month, we had 85% winning ratios. Now, if we set 1% risk per trade, for example, let's say we had 50 trades, 40 of them won, 10 lost. So with 1%, which is more than enough, that's 30%. So there's no need for anything bigger than that. And we also apply when they're asking us, you've been a portfolio manager, what's the leverage you apply? Our leverage is mainly 1 to half. Not 1 to 1, 1 to 10, 1 to 100, 1 to half, and sometimes less, always depending on the stop loss. So the stop loss would define the position size and the risk involved per trade.
All right, so I always come back to how hard is this. I sound like incredibly lazy, but like when it comes down to the user, do they have to be proficient in anything, or can they literally just follow the signal, so to speak?
It's so simple that all they have to do is just follow the signals. We do have in our unique trading dashboard, it's more complicated. It's not just signals like the Telegram group. So in the dashboard, you have access to educational material taught by the STA and CFT. So that's, I would say, advanced syllabus. We do have trading strategies. We do have widgets that help the traders, economic calendars, pip size, position size calculators. We do provide detailed financial reports. So there's a variety of material that's really important for the trader to at least emphasize on the knowledge and obtain the relevant knowledge to go a step above.
So would it encourage people actually to take like the STA course or syllabus? Because you would see that based upon your skills and knowledge of STA, that you're doing quite well with the signals. If I was following these, I think, okay, well, how do I take it to the next level? Have you found there's any kind of long tail with that?
STA, I would say that was my break point in the industry. I was in the banking sector many years ago, and I was also leading the currency department, and I was struggling, and I started looking to obtain the necessary knowledge. It led me to the STA course. I studied it, I passed the exam, I became certified, but I would pretty much say that that was the foundation of my career. And then what followed after, I would say that the STA course was the one.
So, a signal provider then, just to go back to it, is it hard to sell to a brokerage because they're looking to chase a dream also themselves like a signal user, aren't they?
Yes, it is. We did have brokerage firms. We did have a market maker. They said, signals, yes, bring them on. At the end, the client loses. But if the traders and the brokerage firms, if they stick to the signals, and we have disciplined traders, disciplined clients, and even investment firms, and they apply the correct risk management to it, yes, they're profitable in the long run. But when you have investment firms that are after immediate gains, short-term gains, we said, the lifespan of a trader is 28, 30 days max. That's when you over leverage, that's when greed comes in, your trades are winning, for example. Yes, it doesn't mean that you have to go 1-to-100 leverage, because yes, some of them are losing. So don't pick the one that's losing. That's what you should have.
But also, if you're a brokerage owner, then it's a good way for you to make money by following the signal. You need many strings to your bow these days to make money in a brokerage. Is it worth having your own account and following them as well?
It certainly is, even though the majority of the investment firms don't believe in it, because they've seen so many...
Trading's for crazy people.
Exactly. But yes, it is, and it increases the volume significantly. When a trader is actively trading the signals, 4 or 5 signals a day, and they're not losing their account balance, you're increasing your volumes significantly. It's very important.
All right, cool. Well, let's leave it there. You'll look down the camera and give your details, the best way for them to reach you. And I'm sure 5-minute conversation, and understand it, plug and play, have a look, and it's very straightforward.
Yeah, you can always find us. You can look into our website. It's Tiqbee.com with a Tiqbee. You can look at the trading dashboard, various plans we have, Telegram. And if you have any questions, you can always send us an email at info@tiqbee.com.
Also, if you look on LinkedIn, which is to be on as well, we'll have all the links on there as well, so it'll be easy to find everybody. All right, thanks a lot.
Thank you, Paul. Thank you.
See you later. Bye.